Can you explain what the accrual concept is in accounting?
The accrual concept means that transactions are recorded when they happen, not when cash is exchanged. For example, if a company delivers a service in December but gets paid in January, it still records the revenue in December when the service was completed.
Can you give an example of how accrual accounting works in practice, maybe in a business scenario?
Sure. Let's say a company performs a service for a client in November, and the invoice is due in January. Under accrual accounting, the revenue from that service would be recognized in November, even though the cash payment isn't received until January. Similarly, if the company incurs expenses for supplies in November but doesn't pay for them until December, the expense would be recorded in November as well.
How does the accrual concept impact financial statements like the balance sheet and income statement?
Accrual accounting affects both the balance sheet and the income statement. For the income statement, revenues and expenses are recorded in the period in which they are earned or incurred, so it gives a more accurate picture of the company's financial performance during that time. On the balance sheet, accounts like accounts receivable, money owed to the company, and accounts payable are recorded, reflecting the company's obligations and rights before any cash changes hands. This makes the financial statements more reflective of the company's actual financial position.
How about adjusting entries? What role do they play in the accrual process?
Adjusting entries are crucial in accrual accounting. They ensure that revenues and expenses are recognized in the correct period. For example, if a company has earned revenue but hasn't yet billed the client, an adjusting entry will be made to recognize that revenue. Similarly, if an expense has been incurred but hasn't been paid yet, an adjusting entry would be made to record that expense. Adjusting entries help make sure the financial statements are accurate and comply with the accrual basis.
What are some of the common types of adjusting entries that businesses typically make?
Yes, exactly. Some common types include 1. Accrued revenues. For example, if a service has been rendered but payment is due later. 2. Accrued expenses. For example, if wages have been earned but not yet paid. 3. Deferred revenues, unearned revenue. When a company receives cash up front for a service or product to be delivered in the future, it's recorded as a liability until earned. 4. Deferred expenses, prepaid expenses. For example, if a company pays for insurance coverage in advance, it will be recorded as an asset and then expensed over time as the insurance coverage is used.